Subhash Kumar, who's Director of Finance at ONGC, joins us to discuss their numbers. Mr. Kumar, it's great to have you on the show. Thanks very much for taking out the time. Strong realizations this quarter. What's been the trigger, given that oil has been at $74 per barrel?
Yeah, so one is that obviously our top line is driven more by the oil prices, but also it is backed by our good performance on front of gas as well as on value-added products. So our production of gas has gone up by around 3%, and production of value-added products sales have gone up by around 12%. So all these have contributed to strong pipeline.
How was growth in volumes for oil and gas?
So oil and gas actually we are close to the previous corresponding quarter level. We have done this time 6.22 MMT compared to 6.44 last year.
Okay, and do you hope that those kind of volumes will be maintained going forward as well?
Yeah, we would be close to the last year's numbers and shared better than last year's numbers.
Okay, the profit after tax was weighed by higher interest rates. Was that due to the HPCL buyout?
Yeah, partly because we had taken some loan for the purpose of HPCL buyout. So there have been some impact of interest charges on that.
And so, how much would be the interest burden for FY19 that you're accounting for, which would pressure your bottom line?
I think it will come down significantly because whatever borrowings we have made for acquisition, we have been paying through internal accruals, and we are, borrowings as standalone borrowings as on 31/3 were close to around 25,000 crores, which have come down to around 21,000 crores. So as on 30th of June. So hopefully with these kind of realizations, this trend will be maintained, and that will result in reduction of interest numbers.
Yeah, I was hoping that you could help us with some numbers on how much the interest burden would come down by through the course of the year. Would that be possible?
I won't have those numbers specifically immediately ready with me.
Okay. CLSA says that additional 10,000 crore subsidy burden may come upon you. Is that a fair estimate to run with? Because right now, it's all up in the air, Mr. Kumar, when it comes to, what higher oil prices would mean for oil marketing companies, for the fiscal burden, and what ONGC's role will be in the same.
No, we do not expect ONGC to be bearing any subsidy burden.
To that, you're telling the market that there will be no subsidy issue in this financial year.
We do not expect.
Sorry, sir, what did you say?
We do not expect any subsidy burden at this kind of prices.
Okay, and finally, what is the view that you're taking on oil prices? Because that's a direct correlation to your business in terms of realizations. You think that we've seen the peak for oil at between $78, $80 to a barrel? It can't go beyond that?
So I personally believe, this is purely my personal view. I think this is the range beyond which there is no logical reason for prices to go up, because at the end of the day, I think there is enough production capability in the world, except for some geopolitical events. Prices should stay around this level.
Okay, Mr. Kumar, have a lovely day. Thank you very much for speaking with us to discuss your numbers.